now going to pass you on to Mollie Dobson, who's one of our financial crime managers. Mollie is going to talk through some hints and tips really to help you to identify some red flags when assessing income proof. And this part is just our ongoing support with yourselves to help protect you and your business. So over to Mollie.
Hi, and thank you, Michelle, and hi, everyone. So similar to what Michelle said is that I'm just here to kind of give a little bit of an overview, some hints and tips, and kind of give some guidance, and also give you an insight into what we would look at to say, for example, if our team was to look at any of the income. So I think it's safe to say that at the moment, due to the current economic climate, we are seeing a lot of constraints for individuals, as we've talked before, in regards to secondary income and looking to the different avenues of what more income can be used. I think it's really good that is a unique selling point for what we can offer. And I know that in the past 2 years, maybe more the past year, my department and the financial crime team have kind of collaborated with working with the wider business that we can help on these case by case and the common sense lending and make those assessments. Because I'm sure you're all aware, with mortgage fraud, there's two types, and there's fraud for profit and fraud for property. The fraud for profit is probably the hardest one to commit because of obviously there's quite a lot of people that need to be involved in it, solicitors, there might not be a real person, but it's the one where it's the fraud for property, which is where individuals tend to tell those white lies, sort of fabricate income, potentially tell those lies that they think that they can have the loan, and it's about knowing those signs and see what you can look out for. So I've just included 4 of the boxes here, and these are just the things that we would consider. So first of all, whenever we get any income, I would ask yourself, is this plausible? Now, I know that you might be sat there thinking, I'm not really sure, but it could be is that you're looking at the customer profile. So for example, their job role and position. It's unlikely that someone below the age of 20 would have a very senior position. It's not impossible, but it is just not that plausible that you would think, for myself as a manager, and you come into your own roles, the jobs that everybody has on here, it's quite difficult to get into the position. So would someone with a lack of experience, it could even be that if you were unemployed and then you walk straight into a management role, how has that happened? Could you ask the question? It could be that you ask the question and the person says, yeah, I know I'm 20, but I work for my dad's business. I have done since I was 14, and it's just kind of evolved in that I have this title, but it's only a small restaurant, and that's why I'm a restaurant manager. That's plausible. It's about having the confidence to ask that question. Same with a secondary source of income is if you've seen it and you think, I'm not quite sure how they could manage the two together, just ask the question. Because when someone has a secondary source of income, there's people on my team that have a second job. I know that if you're a tradesperson, you could be employed in the day, self-employed at the weekends and the evening. You could be a hairdresser in the week and a hairdresser at the weekend. It's more when you've got to think about if you were a carer who worked obviously so hard for 50 hours of the week, but then you were self-employed for 30 hours as well. Where's this 80 hours of work coming for? Is that the plausibility for it? And again, similarly with the salary, if you were to look at a restaurant manager of a takeaway shop and they were on £75,000 a year, it's just about asking those questions and how you got into it. It really feeds into when you have the KYC. So KYC isn't always about get a passport and a proof of address and that we've sorted it. It's about knowing your customer. So exploring in the plausibility and asking those questions can really help you know that customer, and it can also preempt what could happen further down the line. So say you did get challenged or we did ask a question, you can confidently turn around and say, I know this customer, I know it's absolutely fine. Or it can help you basically before you even get to the point of submission to say, no, this is not going to work out. So that leads on to once you've kind of done the plausibility and you think, okay, this is fine, I'd look at how the income can be validated. So standard, we would accept the documents that Bradley and Emma have gone through in regards to pay slips. You could look at SA 302s, accounting certificates. But I suppose there's limitations of when they can't be evidenced. So say, for example, if they're paid in cash, how are we going to be able to validate what they're saying? So cash is just a high-risk transaction. Could you get an employer's reference? Could you do any checks that we could or get that information? I've put bank statements first because I'm a big advocate that bank statements don't lie, and I believe in this through and through. So if you've ever been asked for bank statements, from together, it's probably because of me, because I might be looking at it. But I think that they can give a really good oversight. They can show the salary transactions, but they can also give an indication of how they operate from an affordability point of view. It could also help you with deposits because you can see the balance. But I just would like to share a story where I think it would be, and I just want to clarify, this was not at Together, but it was another institution. A bank statement had transactions on it, and it was to myfakepayslip.com, which is exactly what you think it's going to be. It's a website where you can make a joke payslip to fool your friends. I mean, I'm not really sure the joke, but it's just those things is that the bank statement can't lie. So the salary credit wasn't there, and there was a transaction to evidence of why it wasn't there. So that's if you ever get anything, 3 months bank statements will help you. That can then lead into when you've got your self-funding and your buy-to-lets, because I know that it's a lot difficult when you are self-employed in regards to a bank statement, because you don't get that salary credit that everybody else does. You kind of have more sporadic payments, you're paying for transactions. So it's about how we're going to be able to evidence that as well. So the reason why I've put this the rental income plausible, I think that's just for your comparables. Is there any reason why they're sort of fabricating the rental income to help for affordability? But I've also put in there that when the AST was signed, so in this scenario where we are using an AST for evidence, what we would look at there is if they're saying they cannot support income, have a look at when it was signed, because that will indicate how correct that is. So for example, if the AST was signed from September 2023 and was a years long contract, it won't be on an SA 302. But if it was September 2020 on a 6-month rolling contract, I would expect to see that on an SA 302, or at least be declared at some point. I've then included a section about errors. Now, I know this is really hard because I know that you probably don't look into this much detail, so I completely understand, but these are just a lot more hints and tips. When I've put the format of the document, now I know you probably don't know what every single payslip looks like, but you can have a general gist. So for example, I know what an NHS payslip looks like because they're quite common. I know that with more of your larger institutions, you would expect to see a finished payslip. If you are, for example, a Together payslip wouldn't just be a piece of paper with kind of this is your salary and this is your year to date. So have a look at those to see whether the type of payslip would match up with the business size. Again, spelling and punctuation is a massive thing because that just wouldn't happen on a corporate payslip. So for example, if there's a comma instead of a full stop, they've spelled pension wrong, for example, that's a massive indication. Could also show that it's been edited. And the figures, do they add up? In actual fact, that could help you link in to Emma's part in, so if you had a look at the figures and there was a year to date, it may possibly be that they've got a bonus that we could also factor in potentially if there was enough evidence. And the employee number, this is often a massive giveaway. So if you work for a big company and you've got an employee number of 2 and the company's got 1,000 staff, you would have had to have been the second person to have employed. So I'm a big advocate for looking at those ones. So I've just got another slide for you, which is just the main hints and tips of the red flags, and a little bit at the top there that just talks about the reasonable person test. Now, what I mean by that is if you take yourself out of the situation, so with none of the experience that you all have, and if you were to just ask someone, if this scenario, or you heard it, would you think it was unusual? So if you were to just tell a random person on the street, I've got a person who's 19, is a restaurant manager earning £75,000, does that make sense to you? Would you think that would be okay? And at that point, if you're doubting yourself, that's when I'd start to ask the questions, know your customer, and maybe ask for further evidence, ask for more payslips, ask for bank statements. So I've just summarised in the bullet points the main things that we would look for and the main things that I think that would be really useful for you all. So the spelling mistakes, does it look right? Sometimes it can be slanted and sometimes that can be because of the way it's been copied. But just have a look at how the format is. If it's been copied and the boxes are misaligned, that's normally a red flag. Again, the size of the business, how long has it been incorporated in regards to the roles, how long they've worked for. One of the main ones that I will focus on as well is that, is there any adverse media on the client? Now, it's a 50-50 on this one because I know that no one, well, some of them do, but a client's never going to come to you and say, just to let you know, I've been declined before because I've provided some false documents, but other than that, what I'm providing with you is correct today. Or they're not going to come to you and say, look, I'm really sorry, I've just come out of prison. Is this going to be okay? Sometimes a simple adverse search could be just a Google search or an open source search of the individual, just kind of get a feel for them. It could also give you an indication. Again, it's not about income, but just about status in regards to like PEPs or high risk. There is searches that we'll do on our side, which we wouldn't be able to share. But I think if you've managed to get quite far along the process with no concerns, it's unlikely that you're going to get something off the back that's hidden away. Another thing is reluctance to provide information is going to make us even more suspicious. I think that if you are a genuine person and you've got a genuine explanation, you would have no hesitation to give that information away, provide the bank statements. Similarly, if they've avoided answering any of your questions and want to answer only 1 and 2 and leave out 3, that to me would be thinking that they don't want to answer